Warren Buffett's Berkshire Hathaway just released their latest Form 13F, which reveals every single move he made in his portfolio last quarter. So in this video, we're going to be reviewing all of his moves, talking about his massive cash position and looking at some key takeaways. So let's go ahead and jump in. The first key takeaway is Warren Buffett now has a massive cash position. The cash position is now sitting at $325 billion. And to put this into a little bit of context, that's basically double the size of what it was a year ago. Look at this charted out. Berkshire's cash pile has been climbing at a rapid rate, especially since around 2021 when they were sitting closer to around $100 billion in cash. Now they're sitting at $325 billion. And earlier this year, Warren Buffett was actually asked why he's sitting on so much cash, and this is what he said.
This question's from Johan Halen, who writes, "You're sitting on $168 billion of cash, which you told us today is now more than $182 billion. His questions are, one, what is Buffett waiting for? And two, why not at least deploy some of it?"
Well, I think that's pretty easy to answer. I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it, and we don't use it now at 5.4%, but we wouldn't use it if it was at 1%. Don't tell the Federal Reserve that, but prefer it. But we only swing at pitches we like.
So basically right now, Warren Buffett doesn't really know how to use the cash effectively. That's a pretty interesting statement. And this clip reminded me of the famous Warren Buffett quote. You can sit there and watch thousands of pitches, and finally you get one right there where you want them, something that you understand, and then you swing. So Warren Buffett isn't afraid to sit on the sidelines right now while waiting for the right opportunity. Now with that being said, there's no doubt he has missed some opportunities, with the S&P 500 being up nearly 25% year to date. Point number two is an interesting one. Buffett was by far a net seller of stocks in the most recent quarter. We can see he sold $36.1 billion of stocks, and he only bought $1.5 billion, so that's a pretty big difference. This means he was a net seller by $34.6 billion, and for reference, this was pretty much the exact same scenario last quarter. So he's been a net seller for a while now. Now if we look at point number three, out of the stocks that Warren Buffett does hold, most of his portfolio is allocated to just a few stocks. We can see there's currently 40 holdings in Buffett's portfolio, but the top 10 holdings make up 89.68% of his portfolio, while the top 5 holdings make up close to 71% of the portfolio. So let's go ahead and jump over and look at this updated portfolio. And we'll look at each position, and we're going to break this down just a little bit more here in just a moment. We can see Apple is still the largest position in his portfolio, although the position was reduced pretty dramatically. American Express coming in at number 2. Bank of America, this position was also reduced, but it makes up around 12% of his portfolio. We then have Coca-Cola at close to 11%, Chevron at about 6.5%, Occidental Petroleum, Moody's, Kraft Heinz, and Chubb Limited. These are the top 10 holdings in his portfolio, along with DVA. And once we get past the top 10 holdings, there's only 2 other positions above 1% of his entire portfolio, and that's Citigroup, the bank, and then we have Kroger coming in at about 1.08% of his entire portfolio. Everything other than that is less than 1%. Now let's dig into the actual buys and sells Buffett recently made. We can see he added 2 new positions entirely. We have Domino's Pizza and we have Pool Corporation, and he completely sold out of 3 positions. But to be fair, all 3 of these positions were very, very small positions in his portfolio. Now the addition of Domino's is actually one I'm pretty excited about because it's a stock that I own in my personal portfolio. If we blow up my growth chart, we can see Domino's Pizza down here. I'm currently up around 33.5% on this position, and when the market opens tomorrow morning, we can see after hours, this stock is already up around 7 to 8%, so I'll be up even more. So this is the Warren Buffett effect at play right here. When news comes out that Warren Buffett is buying a stock, it gives investors confidence. Again, 8% after hours, that's a pretty big jump for this company. Now over the past year, Domino's is only up around 14%, and they had a pretty big sell-off, going from around $489 per share all the way down to around $409 per share, currently trading at $435.97. Now the past decade for this company has been phenomenal, up around 372%, and they've been a dividend growth machine. Look at this. If we jump over to my dividend breakdown sheet and plug in Domino's, what we can see is the company has a low starting dividend yield, sitting at 1.39%, but look at the 10-year dividend CAGR, close to 20%. They're growing that dividend at close to 20% every single year for the past 10 years. For the past 5 years, it's sitting at 18.36%. So look at that dividend growth. In 2013, they paid out around 80 cents per share in dividends, And as of 2023, it jumped all the way up to $4.84 and is now sitting at $6.04. So we're talking about rapid dividend growth over the past decade, and this has been completely backed by growing free cash flow. We can see the payout ratios remain low because the company has grown free cash flow at such a high rate over the past decade, going from around $153 million in 2013 to in 2023 up to $485 million. If we jump over to my stock screener and plug in Domino's, what we can see is from a valuation perspective, the company currently has a free cash flow yield of about 3.29%. So for every share you buy this company at $436 per share, you're getting about $14.33 in free cash flow. Now, over the past decade, we can see earnings have tremendously grown. Same with revenue, same with free cash flow. They bought back a lot of shares. And return on invested capital has been extraordinarily high for this company, absolutely unbelievable. But the one little red flag you have to keep in mind if you're considering Domino's is the debt levels. Look at the debt to assets ratio as of 2023, sitting at 311%. And in fact, if we jump over to my balance sheet breakdown, we can see the company has a debt to assets ratio of 2.93. So do I love Domino's? Yes, I've been a shareholder for a while and they've done really well for me, but keep an eye on that debt to assets ratio. And then the next company Buffett added was Pool Corporation. They bought about $152 million, which is obviously a small position, but let's go ahead and take a glance at it. We can see over the past year, the company's only up 2.55%, but look at the past decade, definitely market-beating returns, up over 500%. And this is another example of a dividend growth machine. I've already plugged in the stock ticker right here. Starting dividend yield sitting at 1.34%, but the 10-year dividend CAGR, again, at 19%, and the 5-year at 18%. Look at this explosive dividend growth over the past decade, and look at how fast free cash flow has grown. The 5-year free cash flow CAGR is sitting at 57%. In 2018, in free cash flow, the company generated about $87 million, and in 2023, it was over $828 million. So rapidly growing free cash flow, and they're rewarding shareholders with a rapidly growing dividend payment. We jump over to the stock screener sheet. Let's go ahead and come up here and plug in Pool. And real quick, like always, you can download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet by heading over to tickerdata.com at the link in the description. Now, if we look at Pool Corporation from a valuation perspective, they have a free cash flow yield of about 4.15%. So for every share you buy at $357, you're getting about $14.84 returned to you in free cash flow. If we look at the free cash flow per share for this company, it's pretty unbelievable. We're talking about exponential growth. Earnings has been growing, revenue's been growing, they have been buying back some shares, and unlike Domino's, the debt to assets ratio appears to be much healthier, and they also have very strong levels of return on invested capital. Now, we can't talk about Buffett's most recent 13F without addressing Apple. Buffett's been selling Apple off for a while now, and he's still selling it. For example, Buffett just reduced his Apple position by about 25%, but that doesn't necessarily tell the whole story. In Q2 of 2023, so a little bit over a year ago, Apple was 51% of his entire portfolio. Last quarter, it was all the way down to 30.09%, and right now, it's sitting at 26.24%. So he's been selling off a lot of shares, and keep in mind, during this time period over the past year, Apple's up about 21.76%. So even though his position is seeing gains and that position is growing, he sold off so much that it's really been reduced pretty dramatically. Now, earlier this year, Buffett claimed this will still be the largest position in his portfolio moving forward, and that is still the case. If we jump back over to Dataroma, we could see his second largest position is American Express, coming in at about 15.44%. Now, if we jump over to the stock screener for Apple and plug it in, again, thanks to ticker data, this data will automatically load in. I want to point out one of the concerns a lot of people have with Apple right now. Now, obviously, the company has had phenomenal returns over the long term. It's one of the largest companies in the entire world, but organic revenue is slowing down. Now, if we look at revenue per share, look at this in 2022. It was about $24.32, and in 2023, it was $24.34. So a very minor increase in revenue per share from 2022 to 2023. But if we jump over to our profitability sheet and look at revenue in 2022, it was $394 billion. And then in 2023, it was $383 billion. So organic revenue was actually down, but revenue per share actually slightly increased from that year. Why is this? Well, you have to understand Apple is constantly buying back their shares. So for example, look at how many shares they bought back over the past decade, going from around 24.3 billion all the way down to now sitting at 15.3 billion. So the only reason we saw an increase in revenue per share from 2022 to 2023 was because they bought back so many shares during that time period. Now, buying back shares can be a good way to reward shareholders, but it is a little bit of a concern if organic revenue is slowing down. And we can see in 2024, revenue came in at $391 billion, which is more than it was in 2023, but not quite as much as it was in 2022. Now, despite the slowdown in revenue over the past few years, we can see the gross profit ratio has been increasing, which is a good sign for investors. The 10-year average gross profit ratio is sitting at 40.5, while last year it was sitting at about 46.21. Now, our sixth key takeaway is about sector allocation, and technology has long been where most of Buffett's capital is allocated, and obviously this was mainly due to his Apple position, but this isn't the case anymore since he's reduced his Apple position. Financial stocks now make up almost 38% of his entire portfolio. So if we blow this up, financials by far the most at 38%, technology coming in at about 26.6%, consumer staples about 16%, and then energy at 11.5%. Everything other than those four categories is below 4%, with services at 3.6% and healthcare at 2.2%. And keep in mind, yes, technology was lowered because he sold quite a bit of Apple, but he sold some financial positions as well. If we jump back over to Dataroma, we can see he reduced his Bank of America position by 22.77%. That's a pretty large reduction, and keep in mind, that was one of his largest holdings. And then finally, if we look at some quick facts, we can still see 9 out of 10 of Buffett's largest holdings currently pay a dividend. The average holding period for Buffett's top 10 stocks is currently sitting at about 8.5 years, and his portfolio value is now sitting at $266 billion, slightly lower than it was last quarter. So there's plenty of interesting takeaways from this most recent quarter. And the last thing I want to point out is Ulta Beauty. This was a position he very recently added, and the stock price shot up because of it. And just a couple quarters later, he's already reduced his position by about 96.5%. So pretty interesting. We haven't seen any reason as to why this is. So go ahead and let me know in the comments down below what you thought of all the moves Buffett has recently made. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.